This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, Zinger Nation? Welcome back to another episode of Benzinga Live. Happy Thursday, everybody. And we actually have a pretty big news day today, kind of surprisingly. We've got Cava IPOing coming out. I think a lot of people are excited about this because of Chipotle's success on the market. I mean, Chipotle's stock has been one of the strongest stocks over the past 10 years. It's kind of like the mid 2000s version of Monster in a way, like Monster Energy stock. Maybe a little bit more of a monster than Chipotle's has been. Let's go ahead and actually compare the two. I'm curious because I'm going to use my Benzinga Pro, but for this particular exercise, I might just use Google Finance because it can be sometimes a little bit easier to find just the total percent change. So Chipotle stock, if we go over a max period, let's go back to, say, like 2010, because 2010, I mean, I'll say this. So 2010, I was about, 14 years old. This is when I started, myself going to Chipotle, started hearing about it on social media. People started talking, people at school would be like, oh, let's go to Chipotle after school. Like it became kind of popular around this time. Obviously, looking at the chart, Chipotle had a lot of success leading up to that from like 2008 to 2010. But back then, I don't really remember ever going to Chipotle. So I'm going to go from here. About more than 700% over about a 12-year period. That's pretty damn good. Like you annualize that over out, year by year, and you're looking at what, 50, 60, 70% gain a year. Monster stock. Check out this. I mean, this is one of the most insane stock charts. I mean, so Monster probably, you really get a lot of the returns on Monster stock when you see like the best performing stock over the past 20 years is Monster. A lot of that is if you got in here where my cursor is in like the mid 2000s. But even going back to that same time frame, like 2011, where I was talking about, because I mean, at that point, I'm 13, 14 years old. I definitely know Monster, right? They're sponsoring all the motorsports with, competing with Red Bull, trying to corner that market. And you can see here up more than, I guess you guys probably can't even really see that well. Sorry. But up more than 1,500% from 2010. So Cava is a Chipotle-like restaurant that's that's Middle Eastern instead of Mexican. I've actually never been to a Cava, so that will be my first my first step of due diligence will be actually going to a Cava. Because here's the thing: when you go to a Chipotle, like it's good. You can say what you want about Chipotle. You can say it's overrated. You can say it's too expensive, whatever. Like I personally really like Chipotle. It's a much healthier version of like a quick meal if I'm on the go and need to get something real quick. If it's between, Chipotle or McDonald's or Chick-fil-A or whatever it is, Chipotle is oftentimes going to be the healthiest version of those options. So Cava, the open is indicating $42 to $44 a share. The IPO is priced at $22 a share. So already kind of an 100% jump. And honestly, like, correct me if I'm wrong, if I'm forgetting something that's happened over the past, few months, but to me, this might be the most high-profile IPO we've had in a while. I mean, at least in terms of a name that people recognize. A lot of people, know Cava. A lot of people eat at Cava. I wonder what Cava's, I don't know if we have any in Michigan. Doesn't look like it. Looks like there is one back home in Missouri. Oh, and Lee's Summit. Okay, that's in Kansas City area. Let's see. Where can I try a Cava? Let's see. We could make this a content. Like what's the furthest? All right, so I'm in Michigan right now. What do we think the furthest I would have to drive to get to a Cava would be to try it out for a stream? Man, really nothing close. Pennsylvania probably is our closest one. Okay. Should I see if they'll Uber Eats it from Pennsylvania to here? Because again, that's got to be my first my first step in due diligence, if we're talking about a new, restaurant IPO, has got to be trying the restaurant. Because if I try Cava and I don't think it's that great, then there's no way I'm investing in it. Because when you're investing in a restaurant chain like that, when you're like Cava, if it's people are looking at it like, oh, this could be the next Chipotle, you got to realize like Chipotle is a freaking monster. Like Chipotle, people love, and it got massively big, gets millions of dollars of free marketing from social media. I mean, it was like a meme back in the day, in like around this time, when Vine was a thing, like, oh my god, Chipotle is my life. Like this whole thing, like Chipotle broke into becoming a social norm, like an institution almost. I don't know, like Cava, we just looked at it, doesn't even have locations in like half the states. It seems like there's some impressive growth there. Let's check the chat if anyone has seen. Yeah, if you go back 35 years, Cava. Oh yeah, Sweet Greens. That's a good. I mean, and that's the thing is like you have Chipotle's the exception, not the norm for these types of restaurant franchise stocks, right? We can look at Portillo's. What's the ticker there on Portillo's again? Someone help me out. PTLO, Portillo's hasn't been that great on the market. Granted, it did IPO at kind of, I guess, the wrong time. We've been in mostly a bear market since then, but Portillo's stock has not been great. What about Shake Shack stock? Look at a weekly chart of Shake Shack. Shake Shack's been actually doing pretty well over the past few months. Gone from $40 last July to $70 here. So that's almost at 100% gain for Shake Shack over the past year. And that's gone quietly. I mean, at least for me, that has flown under my radar. I did not know that Shake Shack's been trading that well. Sweet Green, of course, as Jay mentioned, has also been trading up. So, I don't know. I think like for me, these restaurant chains, they're like, to me, like my first instinct is that there are going to be other more exciting investment opportunities out there, even as just like a buy and hold. They're going to be more exciting. Like I'd probably rather buy Nvidia than Cava today, even though Nvidia's at all-time highs at $430 a share, just because that's more exciting to me. Now that could change because like when I am looking at a stock, I don't like to tie myself to just the fundamentals. Because I think if you do that, if you tie yourself to just the fundamentals, how much money the company is bringing in right now, whatever, you miss out on a lot of growth opportunities, right? If you were just looking at Apple's numbers at the time in 2005 or whatever, I'm just making up a year, you could have thought, okay, this stock is overpriced, or it's too expensive for me to buy right now for a long-term investment. You're not seeing the overall growth potential. So my thing with Cava is the symbol for Cava is Cava. You just typed it out in the chat, whoever asked that. CAVA is the ticker symbol for Cava. It is not trading on brokerages yet. Oh, wait. It is trading now. Okay, so it literally just opened 3 minutes ago, getting a pump up. So I'm excited to see this, how the stock responds on the market in this environment. Because like I said, I think this is one of our biggest high-profile IPOs in the past few months. So if this thing just takes off, if you see it go from like 40 to 80, like do something like Coinbase did when it IPO'd, or have some of these Rivian when Rivian moved, like that's showing me that there's a lot of speculation out there in the market, right? That a lot of people are willing to buy these speculative assets despite a lot of risk right now. And I don't know if that's necessarily a great thing. Like, I was looking the other day and I saw that Nikola was up. Oh my God. Holy cow. I did not know this thing was up 67% today. I was looking at it on a daily. I was watching this stock. Like, I was like, the fact that Nikola's up, more than 100%, like that gives me some pause. That makes me think, okay, is this rally real? Because I sure as hell don't think Nikola is like a real company. I mean, I don't really know if it. I don't know. Either way, I mean, Cava's movement off this IPO will be something to watch, just in terms of seeing how much speculation is out there in the market right now. Looks like the stock's coming down a little bit. But overall, again, my thing with Cava, I think there are more exciting investment opportunities out there. The story for me for Cava could easily change. If I go try one for the first time and I'm like blown away, and I go, I'm in New York or something, and I see 10 of them and they're popping up here and there and there's lines out there and it seems like the growth is there, then I could be a little bit more interested in it. But I mean, I haven't tried it, so I don't know. And I mean, to be completely honest, like I think probably Chipotle with some fast casual Americanized Mexican food. Like to me, that sounds more mainstream, a bigger market opportunity than Americanized Middle Eastern. I just think I'm guessing here. I think I would probably like there's probably Mexican food as a whole is probably a little bit more popular than Middle Eastern food in the United States. So I'd be curious to just look at the market opportunities of Chipotle versus Cava. But again, those stories can change. Like these things can change. I'd be looking at Cava as a growth opportunity. I don't know enough about the company, don't know enough about the food to make a judgment. I will not be buying any shares of Cava today, but Nikola, that's a different story. I mean, I might have to get into some Nikola here because it seems like the stock just won't go down. But all right, guys, I see our first guest hanging out backstage, my man, Steve Kalyjian. Without further ado, let's go ahead and bring on Mr. Steve Kalyjian, see what he's been watching. Hey, Steve, how are you?
Hey, Aaron, how are you? Good morning, everybody.
I'm good. It's good to get you back on the show. How you doing today?
Good. Really good. Yeah, craziness with straight up here on these NVIDIA hit 432, rallied about 60 off the lows. Market's way overextended up here, though. I think obviously the lows are in for the for the year, but I wouldn't be surprised we get some type of, we have big gaps below the market. I think until the market's not going to rally again until the gap, the Qs gap, the 280 gap gets filled. I do think that the way to play the market going forward is the Nasdaq. So if we do come in and make a higher low on the Nasdaq, that's the one to be buying. The Russell's acting like death. The Dow's kind of lagging. S&Ps are, what are we up about 900 handles off the low, 400 off the high. So we came back pretty strong. But again, it's really, I think the market's really not looking at the fact that the economy is so strong, even though unemployment went up by 0.3, and a little weakening in the in the job market. But mostly the most important thing is that I still think that we're going to get a pretty good pullback in the next few months.
Yeah, I mean, it certainly does seem like the market is due for some sort of a pullback. It seems like people, including yourself, Steve, have been saying this. I mean, it was at when the Qs were at 300, people were saying we got to come back down. Then the Qs got up to 320, people were saying we got to get back down. Qs got up to 340, and now we're at 370. And we're back here saying, like, okay, we got to have a pullback at some point.
Yeah, I agree. I hear you. But look, this is parabolic here. And right now you have standard deviations that are like 4 or 5. I mean, like some of these stocks are $40, $50 away. Like Microsoft's like $18 or $20 away from their moving average on a daily chart. And that's, that to me is troublesome here. Stock rallies from 323 to 348 here. So we're nearing the highs of Microsoft for the year. Apple has made new highs for the year. I don't, my personal opinion, the economy is not that great, and you still have high interest rates, and basically yesterday with the pause, the whole world knew it was going to pause. It was like nothing to expect. But then from there, then you have to remember that he said that we're looking to potentially raise one more time and stay at elevated levels for a while. The market's up today because of retail sales, so it's showing that the consumer is still strong. But consumer debt is at 17 trillion, the highest ever. So people are just living week to week and on their credit cards. And eventually, I just don't see this. I think this is going to come to, I'm more looking to short names here than to buy names. It's a selective rally per se. So that's just, that's my opinion. We just look at what we see intraday, and I'm looking for a pretty decent pullback in the next few weeks.
Yeah, I mean, certainly, like I said, like it seems like things are getting overextended. I checked in on the AAII individual sentiment survey, and it jumped up like 20%. Here, I'll pull it up on here, and we're looking at now that 45% of people. I mean, look at this. So we went from 29% of people being bullish and 36% of people being bearish less than a month ago, 2 weeks ago, to now nearly half the people are bullish, 30% are neutral, and only 20% are bearish. And we just hit our 1-year bullish high. And again, this is retail investors, so individual investors, people like you and I, Steve, people out in the chat. Their sentiment on the market is now saying, oh, okay, we are bullish now. All of a sudden that Qs are at 370 and SPY's at 440, whatever it's at. People are all of a sudden feeling bullish. That scares me. This makes me feel like, okay, people are going to come in, start FOMO buying. You see stocks like Nikola up 60% in a day. You see Apple at all-time highs. You see NVIDIA at all-time highs. Eventually, we're going to have to see these stocks come down. How much of a pullback do you think we'll see? You think 10%, 15%, 20%? Like, how big of a pullback would you be expecting here?
The Qs are trading 368. So if you go, and again, 368 minus 280, you're 88 points on the Q. That's about 4,000 points on the NASDAQ. So if you take 368, and that's 20%, yeah, you're probably talking, 20, 24% pullback. That I think that once that 280 cap gets filled, I think then we're off to the races.
Yeah, I mean, and then would you be, after this pullback, would you be willing to go back long buying the dip down there?
Yeah, I would. I mean, look, I think there's overall problems. And, again, I think there's going to be a catalyst here that's going to drive the market south here. And AI will be forgotten for some time. And then it'll just pick it back up again. It's just all psychology here. I've been doing this 40 years. So I just think that the most important thing is now is, I'm looking to you should be exiting any longs, and then if you bought things lower or averaged in, I'd be looking to exit longs here. I don't think we're going straight up to 45, 46, 47, 4,800 on the S&P. I think, right now, I think the eighth wonder of the world is how they're above 4,400 right now. Yeah, everything.
Yeah. So, and you expect, again, I mean, you primarily, we're talking about the NASDAQ here. You're looking mostly at tech stocks.
Basically that's what we look at. But overall, I think the overall market is fairly overextended. The weeklies are in staggering overbought territories. The dailies are in extreme overbought territories here. I think these are dangerous levels.
Yeah. I wonder, just looking here, let me see on my Benzinga Pro, like just looking at a like.
It looks like a double top right there. If you look at that, what is that? Microsoft. This is
Microsoft. Yeah, getting back up to those previous highs. I just pull up the RSI on the bottom here, and yeah, certainly getting above 70, approaching 80. I mean, let's look on a stock like NVIDIA. That RSI, got well above 80. Apple
bring up the Qs.
Oh yeah, I mean the Q's RSI is at looks like about 80 or 77 right now, 80. So certainly,
room to go. But I'd rather be a seller than a long buyer here.
So just to play like I guess devil's advocate, or to think about other potential possibilities, like what could cause the market to go higher here? Could it be that people are piling in short and then they're forced to cover? Like what's
I think that short covering rally has a lot to do with this. I saw yesterday that there was a staggering float net short in Tesla yesterday by the funds. So I think a lot of them are like really feeling the pain here. And I think that there are some funds that are behind and they're just trying to chase it. And that's the worst thing in the world to do. And I've been doing this for 40 years. That's like, to me, a short term or intermediate term top when that happens.
Yeah. So eventually, I mean, like we do get this pullback, and then you're long after. Are you gonna? So you're gonna
I mean,
wait.
like the Apple low 125 or 123, you're not going to see that. I mean, but you'll make higher lows here. Apple may pull into like the 45, 55 range. Nvidia could pull into the low 300s, things like that. But on the Qs again, I like to see the Qs pull in to a point that they give you the ability to get long. I think the pullback on the daily is on the weekly is what's going to, that could really set up for the next long push up.
100%. Well, all right, Steve, we'll have you back on next Thursday. I want you to make a prediction for me. Qs are trading at 368.65 right now. We can round that up to 367. You think we'll be lower or higher than we're at right now?
Lower.
Okay. All right. Well, we'll check back in next week. Steve, always great to get your insights, see what you've been watching. I hope you enjoy the rest of your Thursday and
you too, Aaron. Have a great day, everybody. Bye-bye.
You too, man. All right, guys, that was Steve Kalyjian. Always fun to talk to Steve and see what he's been watching. Coming up on noon right here. Let's do another quick check-in on Cava. Cava. Go to a minute chart here. Uh-oh. Cava got up to about $47, now trading back down to $40. I mean, look, I'm not going to try to do technical analysis on this chart of Cava when it's been on the market for, just a few minutes here. I just have a feeling 40 might be a little kind of a psychological level. We'll see if 40 can act as a floor for Cava though. If it dips below there, watch out. Is it trading right now? It looks like it hasn't moved. It's just saying 40.69. It's not moving. It's not a lot of activity. Oh, there we go. 40.73. All right, so we'll see. That's my prediction. My bold take, my hot take is just that 40 is going to act as a floor. It might be a psychological level for Cava. At least today, and then we'll see. Maybe it pops back up or breaks below that. Other news we wanted to talk about: BBYQ, Bed Bath & Beyond. So Bed Bath & Beyond shares are still trading on the OTC market. Technically, BBBYQ reports came out that Overstock.com placed a stalking horse bid on Bed Bath & Beyond's assets. We can talk about that, what that means. As a result, Bed Bath & Beyond stock actually went up, but it went up from like 18 cents to 20 cents. So I'm not sure how much that really matters or how much we care about that. I certainly don't care too much, but we did see a lot of search volume and people today looking at Bed Bath & Beyond stock, which was interesting, again, considering because really the real stock got delisted and now it's on the OTC markets as this like bankrupt. I'll be completely honest with you guys. I don't really understand this part of it. Like why the stock goes from this listing to this listing. Oh, actually, it does make sense because, I mean, like the NASDAQ and the New York Stock Exchange have certain requirements to stay listed. And if you go bankrupt, you probably don't meet those requirements. But then the OTC market's like, all right, yeah, I mean, there's still a market for people buying and selling shares of this soon-to-be bankrupt company. And you oftentimes do see, I mean, we saw this in crypto too with certain assets that were, or certain coins that were essentially being delisted or like, what was the big one that broke? There was one big one that broke. Terra Luna. Yeah, Terra Luna got down to like whatever, was down 99.9% and then had a big jump. And you see that a lot. I want to say maybe Blockbuster, when that company went out of business, like its shares got a big jump just from like people like rally because there's not a lot of volume. And I guess there's just like a lot of speculation. So these stocks can like rally sometimes. But either way, Bed Bath & Beyond stock was up on this news about Overstock. A stalking horse bid. So this is when a company makes a bid on a bankrupt company's assets, and it sets an initial bid. It sets the bar. So essentially, if say Overstock said, okay, we're going to pay $20 million for all of Bed Bath & Beyond's assets, which I think that's about the number that they offered to pay, that sets the bar. It's like if you're at an auction house and someone starts the bid in, that's what a stalking horse bid is. So it's the first bid. So no one can go below what Overstock bid, which again was $20 million for Bed Bath & Beyond's assets. Other companies could come in. Target could come in and say, oh, well, we see a little bit more value in acquiring Bed Bath & Beyond's locations. Let's go ahead and bid $30 million. So other companies can come in and outbid Overstock, but no one can come in under what Overstock offered to pay. All right, guys, I do see my main man, Nick Brown, hanging out backstage. So let's go ahead and bring Nick on, see which stories he's been watching, see what Nick wants to talk about, and then we'll be talking to Mr. Rob Roy here in about 10, 12 minutes. And then we'll be wrapping up with some ticker time, maybe from the chat, as well as looking at some other top headlines from, of course, Benzinga.com. Check it out. Mr. Nick, how are you?
I'm good. It's nice to see you back in the office.
Yeah, it's good to be back in the office. I, much rather prefer doing the show from here than home in St. Louis.
Where do you want to start? You want to start with the Fed, or do you just want to start with the 2 breaking items that just dropped minutes ago?
Let's start with the breaking items. The Fed, I mean, that's so Wednesday, Nick. Who cares anymore?
All right, so CNN has dropped the new one. It says U.S. government agencies hit in a global cyber attack. It says several U.S. government agencies have been hit in a global cyber attack that exploits the vulnerability in widely used software. It's not immediately clear if the hackers responsible for breaching the federal agencies were a Russian-speaking ransomware group that has claimed credit for numerous other victims in this hacking campaign. A spokesperson for the CISA has told CNN no comment when asked who did this. The U.S. Cybersecurity and Infrastructure Security Agency did provide them a statement saying, quote, the agency is providing support to several federal agencies that have experienced intrusions affecting vulnerable software exploited by the hackers. Eric Goldstein, the agency's executive assistant director, said that we are working urgently to understand impacts and ensure timely, compensation and to see what's going on. So that's the one. Still very unclear of when this all happened, what they compromised. So we'll be watching that. Wall Street Journal has just dropped one that says Justice Department to investigate the PGA Tour Live Golf Pact. The probe introduces uncertainty to the agreement between the warring bodies that stunned the golf industry, which was already facing scrutiny under federal antitrust law. So there's some word that the Justice Department has already been investigating, but the PGA Tour and other leading golf bodies for some behavior. It is also probable that any transaction that is hammered out between the rivals won't take effect for some time, maybe next year, the journal's reporting. So I'm watching that. Justice Department declined to comment on anything, but those are the stories that I'm watching besides the Fed.
Okay, word. Yeah, I mean, I think like right now, I haven't seen a lot about the cyber attack yet. Of course, you said it's kind of breaking. It looks like on the 1-minute chart of SPY, nothing too much is happening. I do think, okay, so the PGA Live merger. Let's see if I can, let's see if we've got any headlines. Okay, Justice Department to investigate. So I don't know if this is like antitrust or what's going on. I think this will be a story where even if you're not into golf or really not into sports, I think it will be a story worth following because it's much more than that. It's much more than sports or golf. It's about money. It's about how money is spinning around in these different webs, kind of behind the scenes of these leagues. You have all this Saudi money coming in from MBS, in the public investment fund from Saudi Arabia. And it kind of creates more questions about American institutions where if the PGA Tour, which has been an American institution for dozens and tens and 20s and 30s and 40s years, all of a sudden kind of bends the knee because they've got a big check dangling over their head from Saudi. It's like, okay, well then what is off limits, right? Could the Saudis come in and start, maybe the MLB is next. Maybe next thing you know, baseball is doing a merger with some sort of Saudi Arabian tour. Maybe, the university you went to is like, well, I mean, they just wrote us a big check. We might as well become the new, Saudi Arabian, so it's like, I think a lot of things are going to be worth following about this story. Could be some potential. I don't know. I mean, we could find out that some people are involved that have big names. I have some theories there, but what I mean, do you have any other thoughts about this? The PGA Tour Live merger, Nick?
It's just very interesting that all of a sudden that they're coming together. And so the Wall Street Journal has been doing a very good job dropping these scoops with who's getting paid, who's not getting paid. But it's with the Saudis and everything. My dad's a big golf person. He golfs Tuesdays. He watches golf periodically. And I asked him about this the other day, and he just said, this is an absolutely horrible deal. This should have never happened. So it's going to be very interesting to hear what the other golfers that like Phil Mickelson, Tiger Woods, anybody who's involved heavily with the PGA and that golfs with this big money, what they think of just taking the deal and then going across seas to golf, or how this all works. I'm not a big golf person, but it's very interesting to see golf coming up in the news more and more. And so this is going to be a story that's going to be sticking with us for quite some time.
Yeah, and I speaking of staying on the golf subject real quick, I have been on. Part of the reason I was back home in Missouri was because last weekend I went on a little golf trip, and I've been on a little golf kick yesterday, which had me looking at some different golf stocks yesterday. And so, okay, this is, again, I haven't done full due diligence. I will be looking more into these stocks to figure out, like, do I like one more than the other, et cetera, et cetera. I was at a golf shop yesterday. First of all, like, the balls I wanted to buy, they were sold out. Place was packed. They have a driving range at the golf store, and like every single spot was taken. They had flyers up at the golf store that said like help wanted for people helping to sell club. Like, it seems like that whole industry is just popping. So again, I mean, like, maybe this is not the best sample size. Like, I was at a golf store on a nice summer day in Michigan, and it's, whatever. But it seems like, just from the eye test, that there are a lot of people out there spending money on golf. You have ticker GOLF, ticker golf. This is Ashunet Holdings. I don't know if I'm saying that right. I hope I am. Ashunet owns Titleist, FootJoy, and some other companies, I believe. You also have MODG, formerly ELY. This is Topgolf Callaway brands. Callaway, obviously, big a monster when it comes to clubs. And then they made that investment by buying a majority stake in Topgolf. So you have these are kind of the two biggest golf stocks, I think, out there. You also have some other, like Dick's Sporting Goods, stuff like that are also beneficiaries of golf. But golf and MODG are going to be your two more kind of standard golf plays. I don't hate a little bit of Callaway here. I'll tell you that much. I mean, like, I don't know, again, like, super fundamentals, but I think just feeling the vibes, it feels like golf's hot right now. Does your dad play Callaways, Nick?
Yeah, no question about that. That golf's hot right now. He just recently joined a league through work. Every Tuesday, they go to a different golf course. They golf, and people are talking about. And we have a course near our house, 15, 20 minutes. You can do mini golf. You can do regular golf. There's so many golf courses now, especially when the weather is nice. A lot of people go golfing in the morning. I mean, I'm not a big golfer. If it was me, I'd just drive around the cart, and I have before. So it's like, it's either you're going to play the golf or you're just going to sit back on the cart, relax, watch everybody else golf. But I think golf is going to be sticking around, especially with this deal, this merger coming. It's going to be very interesting, as I said earlier, to see the different perspectives of should they have merged together. How is this deal all coming together? What are the components of this deal? And is this going to be sticking around for long term? Eventually, are they maybe going to split if something doesn't work out? And so it's going to be Live Golf, PGA Tour Golf. It's going to be very interesting.
100%. All right, hold on, Jay Rice. I got to address a couple of your comments. Topgolf having some issues. What are those? I haven't seen those because I am like on the fence of buying some MODG stock, and depending on how bad these issues are, maybe that will deter me. Ask me anything about the PGA Live deal. I'm on top of it. Okay, so I'll just come out with this is, again, I'm not being a journalist here. This is not facts. This is just me kind of throwing my hot takes out there, making a prediction. I think as these like probes, as we learn more about the deal, this year's my hot take, I feel like Donald Trump is somehow involved in this. So here's why I say this. A, because Donald Trump like called the merger from a long time ago. in like almost like an eerily accurate way, which he does have a habit of like being right about some of these things like far out and having that foresight. So I'm not saying like that in itself implicates him, but they were also hosting and in talks to host a lot of live events at different Trump golf courses, which means there was some sort of communication there between Trump and the Live Tour and the PGA Tour, because there's also PGA events held at different Trump locations. So I feel like, again, I'm not saying he like brokered the deal or did anything like this, but I feel like as these like, if there are more probes and different like documents that come out, I'd be surprised if he's not involved in some sort of communication at some point across the line. Growth issues for Topgolf. That doesn't surprise me because I freaking love golf, and I'm not the biggest fan of Topgolf. Like, it's like okay, but it's not one of those things that me on like a Friday night, I'm like trying to get a big group together and saying like, hey, let's go to Topgolf. So even as like a huge golfer, it's not my cup of tea for real.
Now, golf's not golf, Topgolf, anything.
Hey Jay, how? Okay, so okay, all right. I'm saying my hot take is that it'll come out that he is. So I'll probably be wrong. I'm saying like I don't even know if it's likely. I'm saying I think there's like a 10% chance that like down the road we're figuring out that like, oh shoot, like Trump like was, but who knows? Maybe he was. Maybe that's a bad hot take. But I think those two pieces together, the fact that there was the clear communication between Liv and Trump's courses, and then the fact that also he had he made this prediction that ended up coming true, that he might maybe what it was he had some more inside knowledge of those talks going on, maybe that he didn't have anything to do with him, but maybe he at least like knew some of those things going on behind the scenes.
That's a good take. I don't know of anybody else that has taken that take, so you're taking the hot take. It's going to be very interesting to see if you're right. I don't know if anybody's watching.
I'll watch. I'll follow along the court cases and stuff just for that.
I'll say flip the moment, and then we can make this moment go viral.
Yeah, I'd love that. All right, so Cava still above that $40 share mark. See that? Let's see.
Did you say the closest one was in Pennsylvania, Cava?
I think so. I was looking at the locations, and I'm in Michigan. So if anyone from Cava, here's what we should do. We'll clip this part out and send it to Cava's PR team. If anyone from Cava wants to bankroll, and when I say bankroll, I just mean like maybe pay for my gas and my like bowl or whatever you get at Cava to eat. But I will drive and we'll make content out of it from Michigan to wherever the nearest Cava is to taste it and to see if it's good enough for me to want to buy the stock. So that's my proposition for you, Cava. If you are out there watching, Mr. Cava, I will do that. All right, Nick Brown, it is time for me to bring in my next guest on. Rob Roy. We'll be talking for a few minutes, then I'll bring you back on.
Perfect. I'll hang out.
Find 2 or 3 more headlines you want to talk about. All right.
Fine. Well, we could always talk about the Fed after.
Okay, I'll talk about the Fed with you, of course. All righty. We will be bringing on my man, Rob Roy, here in 1 second. Let me just take a sip of my soda. I got to stop drinking soda. If anyone has successfully quit drinking soda, let me know how. I've tried the sparkling water thing, like drinking LaCroix instead of soda, and it curbs my appetite to a degree. I don't know. It's tough. All right, let's go ahead and give Mr. Rob Roy that special Zinger Nation welcome. When we come back, we'll be talking some fibs, some charts.
This
What is up, Mr. Rob Roy? How you doing?
Aaron, how are you, sir?
I mean, it's hard not to be good when the market just goes up every single day, Rob. I mean, it's easy to invest sometimes. You just gotta like, just get in position. What do you call it? Position 1, position 2?
Well, if you're placing the trade, it's position 3. If you're just watching it, it's position 1. It's back here. Position 2, I'm getting ready. Position 3, I'm on the edge of the chair, placing the trade.
All right, well, there you go. I mean, it's not always going to be like this, but for right now, it seems like you can just buy anything and watch it go up.
Yeah, we did 5 trades today. All of them worked out for us. So 1 or 2 might still be open right now, but actually a little more than that, a couple of spreads. So, but overall, pretty good. As far as your soda goes, 13 years ago, I quit.
Really?
Yep. Have no interest in. I love sugar. It's an addiction for me. You know, they say sugar's more addicting than heroin. There's no question sugar's an addiction to me, but soda, I was drinking.
But so do you do? So you still have a sugar intake, just not soda?
Right, but that was the same. I didn't stop eating chocolate because I was drinking soda. It now became much less. So I fight very hard not to eat it. Right, we don't keep it in the house. If company comes over, it goes in the garbage when they leave. We don't keep anything in the house purposely. No one else eats it but me, so best to throw it away. But I was doing 2-liter bottle of Diet Coke a day, and it was just killing me. Coke Zero, Diet Coke, and I just stopped it cold turkey.
Yeah, I mean it's really bad. I mean, so this one little squirt soda, which I usually just drink regular Coke, is my go-to. It says 63 grams of added sugars. That's 127% of your daily volume. I think if you're going off of a 2,000 calorie. I'm just gonna do this quick Google search real quick, for my own sake, because this might help me quit soda once and for all. So I'm gonna do how many grams of sugar are in a packet of sugar. All right, so one of those little sugar packets that you put in a coffee, it says it's 4 grams of sugar. That means this has about 18 of those sugar packets in here. It'd be like if I took a bottle of water and poured 18 of those sugar packets in here and drank it. That's pretty gross.
Soda and things like that are the reason that upwards of 0.75% of people in this country are insulin resistant.
Interesting. I wonder what that means. And I know a lot of people have made, what does that mean for Coke stock going forward? Because I know Coke now, they make Dasani and lemonades and other drinks that aren't soda. So they have this other market share too. But you'd still have to imagine that eventually people are going to be drinking. I think soda consumption has gone down over time in the United States as more education has come out about, health and diet and all this stuff. But I can't imagine that if, soda consumption does continue to go down or does start going down, if it hasn't already, that it won't be bad for Coke and Pepsi and whatnot going forward.
I agree. It's funny when you look at what's in some of these things. Here, I just saw a video the other day that Putin has outlawed all GMO in Russia, and you're going to jail if you're caught using it. So, I mean, that's what we should be doing here. It's pretty bad how bad the stuff that's in our food actually is.
Well, I'm not as educated as maybe I should be on some of these things, but from what I understand, not all GMO is necessarily bad and healthy. I think certain, if you look at some of the agricultural innovations over the years, again, I'm not. Maybe I shouldn't talk on it at all. I'm not as educated. But if you look at what your average banana looked like 30 years ago, the ones today look a lot better. I think there's less nutritional value in them, but I think from a consistency standpoint, from a farming standpoint, I think some of the, and again, I'm not talking about added chemicals or pesticides, anything like that, but I think some of the modifications they've made have been for the better. Probably it's one of those things where you want a middle ground. You want a little bit, but we've gone too far, and now but again, not my area of expertise.
Sure. When they program into and create corn and make the corn sweeter with a chemical that makes you want more of it, corn syrup, right? Type things. That's where some of the problem lies. But yeah, listen, I'm sure there are some things that can be beneficial, but depending on who you listen to, the other side of that coin is all of everything that we do to put into animal feed and grow this stuff to make it better for the animals. If we just grew it for humans, we would be able to feed the entire world without any animals at all. So go figure,
Interesting.
I know the right answer, and you'll never get it. Keto's a great diet. It's a horrible diet. You should be on a vegan diet. No, you need to have just beef. I mean, you're never going to get a good answer.
Yeah, and I think it's one of those things that, as time goes on, we'll learn more and more. And, when I'm older and I look back, I'll be like, oh my God, I couldn't believe I was eating this in 2023. And I thought it was healthy at the time, but it wasn't, whatever. So there'll be, it's like, cause we were eating whatever 20 years ago, and then it was, okay, that was not good. So, again, neither here nor there. I'm sure maybe we'll get some comments in the chat from people that have thoughts about GMO or these different things. But Rob, what chart do you have pulled up? We just got a spy chart.
Right now I got a spy chart pulled up. Didn't have a good setup on an intraday off of any of my fib lines today, but I did off of pivot points. So pivot trade, I call it a power hour trade because we really look to take this in the first hour of the market. So we got this really nice breakout here. We got an intra candle bounce on a 1 minute candle in there, right about 9:38 or so. We were able to rock that from 436.5 up to about 438.5. So we had a really nice move. It netted $1.20 on the options for it. So, and now we're talking about from 9:40 until 9:55. So 15 minutes. We're in, we're out. The trade's over. I don't look at the chart anymore for the rest of the day. But $120 for one contract, and we paid $1-ish for it. So, I mean, we had over 100% rate of return on this. So fantastic move for us today. Fantastic. So great setup on SPY today.
Yeah, I mean, it's been a trader's market, especially if you're willing to go long when it looks like things might be a little bit overextended. Rob, looking at just the SPY on like a weekly chart or daily chart and looking at the fibs, eventually, let's just entertain this thought. Let's just say eventually we do get a pullback. What would be like some sort of a fib level maybe you'd be looking at this pullback where you'd say, okay, now this is where I can now go ahead and get back long after the pullback. Go ahead and kind of like where you would buy the dip essentially.
All right, I'm going to lay some stuff on you now, though. This is
all right. I'm ready. I'm ready.
What I've taught before. All right, you good with it?
I'm good with it.
All right. So you see down here, Aaron, where my mouse is, where the Fibonacci started.
Yes.
Right, and then up here the Fibonacci ended. Right, that was here. Actually, let me just go back to it. So that was the week of 12/23. And because the weekly chart now and the week of 2/3, that's where my fib is drawn. So now what I'm going to do is I'm going to take another Fibonacci tool and I'm going to click on that low right there where the fib started. I'm going to come all the way up here to where the fib ended, and that's going to be my second click, right? So this shows me the entire move that was made on fibs was in that A to B range. Now we're going to take this tool and we're going to bring it down to the lowest low we made in this pullback. Right, which was, and it's a C, right, which that takes us down to that 380.65. And I'm going to pull these forward just a little bit to make it easier to see. On the far right-hand side, we have 390.93, 407.56, and 424.19. Those levels are, it's called an ABC pattern. Those levels take A to B, whatever that was. So if that was $10 as an example, and then it takes the pullback to C, whatever that pullback was. And from there, it extrapolates out at 100%. That would be another $10 up here at this green line. So it gives us the extensions of where we're looking to go. They're great legs to use on the way up, and they give us pullbacks on the way back. So I'd be looking at that 424.19 level as my first place for a pullback and a bounce. And ironically, look where the 8 moving average is right now at that exact fib level.
Got it. So maybe this could be a point where we're topping out, you're saying?
No, not at all. I mean, when you look at patterns like this, you can get extensive duplication moves above. So as an example, I'll take that back off again, and let me draw another. Just gonna make sure I grab the right one. Another pattern on there. I'm gonna identify this one from the same low right in here up to this high, right? And what I'm going to do is I'm just going to pull it all the way out to the right so it's easier to see right away, right? So when we look at this move right here, 100% extension would take us up to the 462.29. So the move that was made between the December and February dates, that move extrapolates out up to 462.29. That's just a straight stacking method on top. So I'm looking at that 462 as a potential for us to make it up to. Again, where does the next CPI come in, PPI? What happens with the Fed as far as our rate? Are we going to shift closer to a hike in July? All of that will play into it. But that 462.29 is the next level we're looking at, right, on the upside. And if it blows through that, we've got 484 and 506 as the levels up and beyond that. I'm not saying we're going to reach those. The further we get away from our origin point, the harder it is to get to that next level. But these are levels that if we don't get pullbacks, we're looking for the potential for the position to move. And if we do get pullbacks, we're looking for bounces off of those levels. And those bounces, Aaron, particularly if that bounce comes in the form of a confluence with another fib line like we have right here, right where we're sitting. Give me a close up tomorrow at, tonight at 441, 442, somewhere in there tonight. Pull back tomorrow and bounce. What we've just done is the floor you're standing on is reinforced now. It's not just a piece of sheetrock or a plywood rather on the floor. We now have two pieces of plywood on the floor. It's double insulated, double supported, so it's stronger. We have a better chance of a bounce. And if it does break through, it's a harder break normally. Meaning if it does break through, it was a strong move that caused it to break to the downside.
That makes sense. So I guess right now, I mean, as we're still, obviously the trend is your friend. We've got some bullish momentum. The S&P 500, NASDAQ, all going up. Pretty much everything, unless you're looking at the IWM. What levels then, on the fib point, are you like, okay, this is, we're overextended here. I'm finished. I'm not buying anything else up here.
Well, so that's not necessarily the case, and here's why. This fib, Aaron, is good, and what I'm going to do is I'm going to delete off that little channel thing that I just drew in there, just to make it more compliant for us to view this, okay? A little easier to see it. So when I'm looking at this, the stock right now has made a really nice move up. We still have enough room to run as far as I'm concerned to get up to this negative 618. That's where I'm looking for a place to potentially redraw the fibs. If we break above and close above that negative 0.618, which is a 445.22, and we get a pullback from there, right? If that's the case, then we'll redraw the fibs and we'll redraw them from this low to wherever the swing high is on that position. And I don't have that answer right now because it hasn't happened as of yet.
Got it. That makes sense. So let's flip from the SPY to some individual names. I mean, what you said you had some trades that worked out today. Can you walk us through a couple of those? And then we've got probably only a couple minutes left, unfortunately.
Sure. So I liked Apple's bullish move today. I went ahead and did a bull put spread, which is a credit spread, right? You sell one option, you buy another option. So in other words, you sell a naked put and you buy a protective leg down below it, one strike apart normally. And they were the, let's see, 182 half, 180. We took in 35 cents on that. We're still open on that trade. All the credit spreads are still open, I believe, right now. I don't think we've gotten any of them closed just yet. So it was a nice little setup. It's a nice cash flow trade. $35 on one contract. You needed $215 in order to do this trade. So if you average it out there, what you're looking at, 35 over, if it's 40 over $2, it's about a 20% rate of return on this position if it expires for us, and it expires tomorrow, right? So Apple was a really nice setup.
Yeah, Apple's been super strong, of course, passed back above, I think briefly, that $3 trillion market cap. It does seem like, a lot of the market strength has been, kind of from a few names. What do you make of that?
Yeah, listen, Apple's had some good strength. It's had some good move in there. Apple is its own cult, right? It's their own, they should be their own index. There should be the Apple index, right? Because it doesn't matter what the NASDAQ does or the S&P. Apple does what Apple does, regardless of what's going on in the market. They've shown us that time and time again. So their strength comes from internal. They've got a great motto there. If anybody really wants to see what makes an Apple different than most other companies out there, Simon Sinek did a TED Talk on Finding Your Why. And he talks, if you've ever read that book, it's phenomenal. He talks about what makes Apple so different and how they look from internal instead of external things to grow their business. And they really have captured the hearts of just millions and millions of people around the world that will not switch no matter what. No matter how bad things get, they don't care. They're staying right where they are.
And that's what I think from an investing perspective, like that there's a threshold that a company like crosses once it becomes more than a company and an institution. I mean, I was talking about Chipotle earlier, and like, you know, Cava just went public today. A lot of people are like, could this be the next Chipotle? And it's like, Chipotle is Chipotle. Apple's Apple. Like, these are the standards that you have out there. That's not the norm. Like, a company, just because this company is in the same industry and, you know, like, say there's a new smartphone company and they're breaking out an IPO in today. Would we be saying, are they the next Apple? Probably not, because Apple's already out there. People, 90%, however many percentage of Americans already have iPhones or already prefer iPhones to other smartphones out there. So if you're looking, and this isn't trading, I'm talking about like investing. If you're talking about buying and holding a stock for a long time, you want to find these companies that cross that threshold. Now all of a sudden are like so big, so ubiquitous that you can't escape them, right? You can't go throughout your day in America, if you're leaving the house, whatever, without seeing an Apple product, without seeing Apple, right? You see Chipotle's everywhere. So, and it's hard. I think it's hard to predict which of these companies will get to that point. But you know, maybe you have signs. I don't know.
Apple and many companies like it have what is considered to be a moat, right? Think of a castle with a moat around it, right? It makes it very difficult for the opposing forces to cross, right? Water, alligators, very deep, right? It makes it very complicated to get across. If you're an Apple user and you decide you want to switch, what happens? Your phone, your watch, your laptop, your tablet, you've got all these components now. Now you want to switch over to a Samsung or to a PC. It's a very large moat, right? You've got all these little companies out there like Mint Mobile, and so that's awesome. And that's great for that very low cost. And they're filling a niche, but they're not going to ever, in my opinion, I don't think, are ever going to compete with an Apple. I think it's going to be very difficult, no matter who it is, to try to school and own an Apple as far as what their market share is and what they do.
100%. And yeah, I mean, finding that, I know there are a lot of big time major investors that talk about finding companies that have this moat, right? Because if you are a company, even if you're super profitable, but you don't have a moat, you don't have anything that differentiates you, there are going to be other companies that come in and say, hey, they're profitable doing this, we can do this too. But when you have a company that's profitable and they're doing something that other companies can't do, that's when you got something special going on.
Exactly.
Well, Rob, we're coming up on time here, but I want to go ahead and give you an opportunity to talk about your website, and I'll go ahead and drop that link in the chat as well.
Hey, guys, so tradinglikeaboss.com is where we offer all kinds of free resources are on this page. I'm going to tell you one of the things that you want to do when you come here is scroll down. All our free trainings are up here, and find in the middle row this Trade with Rob. We have been crushing it with our results inside of there. If I grab this real quick, let me just open this up. I'll show you the candidates of what we've done, right? These are the trades. We put out a free video every day or almost every day. We do it at least 3 or 4 days a week. So if it's in orange, we did not take the trade. If it's green, it was a profitable trade. If it was red, it went against us, right? We have had 2 trades that have gone against us since May 9th. That's it. We just got an email from a student this morning thanking me for the McDonald's trade, which was for today, that he did 7 contracts and was up $400 and something. I don't know exactly what it was. But folks, you can have an amazing opportunity on a trade that I don't care what direction the stock moves. I am setting you up that if the market goes up or down, the trade will work today, right? And there are very specific rules that we follow, and it works well. So check out the trainings that are on there. And get signed up for that Trade with Rob, which is a free training.
Hell yeah. Love that. Tradinglikeaboss.com. The link is in the chat, guys. There are so many people out there that will try to sell you this, sell you that. Rob doesn't have that, just free education on the site. Go to tradinglikeaboss.com to learn more. Rob, always great to have you on the show. We will chat next week.
There you go. Easy Mike, appreciate it. He said he got in the CRWD trade. There you go, which was from the previous day. Excellent. All right, Aaron. Beautiful. Appreciate being on. Everybody have a great day. Be safe.
You too, Rob. Alrighty, y'all. That was Rob Roy again, tradinglikeaboss.com to go check out more of that free education. Always great to talk with Rob, learn about some fibs, learn about some options trades. Really, I mean, like, good guy, good trader. What else? What else do you need? What else? I mean, where else do you find this stuff on YouTube? I don't know. All right, I do see my man Nick Brown hanging out backstage. Let's go ahead and bring Nick on. We've got a few more minutes left of the show. We're gonna run through some of the top headlines on Benzinga.com. And that will be pretty much a wrap for the day, unless anyone in the comments has anything they're dying to talk about. Again, you guys had I'm buying some Maj here. I'm buying some Maj. I'm not, I know we've got the top golf concerns. You've got the growth concerns there. I'm okay taking those on a little bit. I think they'll be able to figure it out, but that's my take of the day. Wait, hold on. John G. I was just talking about Shake Shack stock on the show here a few minutes ago. Am I wrong? Okay, so it's John G. I'm not gonna make him come on the show unless he wants to. We do have some. So okay, John G is gonna come on the show. All right. So John G, you guys might not have met him on Benzinga Live. It's our lead, one of our lead developers. One of the wait, hold on. Where's AT? It's the problem. Stream Deck's not connected. All right. Well, we'll
I can be anonymous.
All right, well, so we've got Anonymous here. Wait, can you see if this mic's on? It's probably not. Talking to it real quick. No, the mic's not on. All right, well, here, we can share this mic. Oh, wait, never mind. We can't. All right, John's going to come over here. All right, so we were talking about Shake Shack stock on the stream earlier. We have a Shake Shack right over here. I go to it all the time. But, John, correct me if I'm wrong. This is not the first time this week you've gotten Shake Shack, correct?
Actually, this week it is. Usually I get it like twice a week.
Are you sure? I can almost swear I saw you walking through the cafeteria the other day with some Shake Shack.
You might not be wrong.
I might not. Okay, so hold on. We can't hear John in the microphone right now. But if you didn't hear, initially he said this is the first time that he had Shake Shack this week. Now he's second guessing this. I'm also in the same boat. I can go through my text because I mobile order every time I get a text. And I realized one time when I got a text and it was like the 8th text that month that like your Shake Shack order was ready, I was like, all right, I might be going here a little bit too much.
That's good.
So just based off the food, would you be willing to buy the stock?
Honestly, here's the thing. You know why I didn't order Shake Shack earlier this week?
All right, wait, hold on. Talking to the mic. All
right. You know why I didn't order Shake Shack earlier this week? Because their app doesn't work.
Wait, since when?
I don't know. Since last week.
Let's see. Maybe you just need to update it.
I did. Yeah, you get the nice promo.
Okay.
Yours works. Yours works.
Indoor pickup.
Mine doesn't work.
Okay. So yeah, I can go. Let's see if I can go. I was out of town for about a week, and I don't have a Shake Shack as close to me here. But here, let me go to my orders. Can I see that? My history, my profile.
Yeah, mine's just stuck on the Shake Shack green screen.
Well, you should know how to fix that. Maybe if you fix that problem for their app and send it in and say hey, I noticed this problem in the code. Here's what it is, and you fix it for them, they'll give you free Shake Shack for a year.
That would be worth it.
Oh, history. All right, look. Let's see how much I've ordered Shake Shack on here. All right, June 2nd, May 24th, May 9th, April 25th, April 17th. All right, that's not too bad, actually. But I also may have gotten in on some other people's orders that weren't off my phone. That's where you got to...
It's a staple.
It is a staple. All right, so Shake Shack, I didn't know. Again, the stock's up from $40 to $70. It's been on a tear. I might need to get in and buy some Shake Shack because I do love the food. I do frequent there a lot. All right, let's bring on Nick Brown. Sorry about that, Nick. What is up, my man, Nick Brown? How you doing?
Good. All right. I got a few follow-ups from the cybersecurity.
Okay. I do see, I think some stocks like Fortinet, CrowdStrike, some cybersecurity stocks might be moving a little bit on this.
Yeah. So this is in pro. MSNBC interview. The U.S. official says government working to figure out the impact of the cyber attack. And Reuters is reporting the U.S. Cybersecurity and Infrastructure Security Agency director says he's confident that there will not be significant impact of cyber attack that hit the U.S. agencies. That's the latest on that front.
Say that one more time for me, Nick.
The Cybersecurity and Infrastructure Security Agency director, he's confident that there will not be significant impact of the cyber attack that hit the U.S. agencies.
Okay, so it doesn't sound like maybe a big deal.
No.
Okay, cool.
The Fed yesterday, it was very interesting. Some notes hit the wires late last night, early this morning, that Some banks are seeing an additional 1 to 2 hikes. So if you're not familiar with yesterday, the FOMC put on hold rate. So it's now currently sitting at 5.5% to 5.25%. They voted unanimously. 2023 in unemployment seen at 4.1 versus 4.5%. The median rate forecast rises to 5.6% the end of this year, and the end of next year will be 4.6%. And the extent of additional firming to hinge on economy. So B of A last night in a note that I got my hands on says that they expect 1 to 2 additional hikes. So they see the Fed to deliver a 25 basis point hike in July. And then they look for an additional 25 basis point hike in September for the terminal rate of 5.5 to 5.75%. Though the Fed may decide the last hike should come in November per the chair's guidance that the Fed would prefer. So right now it's looking like maybe July, September, maybe July, November. It all depends on how the recent eco data comes in, along with CPI, PPI. I don't know if you saw, Aaron, but Fundstrat's Tom Lee is suggesting that CPI could actually come in 3% or 2% in July, which would be June's, because the latest over a year, going back a year, I believe PPI or CPI, I believe CPI, the 1 year over year metric is like 1.6%. So after you drop that, you have to factor in the basis points, and that's really going to help drive down the inflation print year over year.
Yeah, I mean, I think, it was interesting to see you had the Fed, you had Powell basically kind of, we're pausing for now, but we might have more high. Like it sounds like it, but they also admitted that they were wrong on some of their inflation projections. I think a lot of estimates now are inflation to come down. I think the worry here is that you get people so excited about this idea of, okay, now the economy is avoiding a recession. Now inflation's coming down. Let's go out. I mean, everything's great. Let's go out and buy all these stocks. You see stocks go up again. Next thing you know, people are spending more. Next thing, like, who knows? Inflation could come back up if the market goes up too much, all these things. So it certainly will be interesting to see kind of what inflation does the rest of the summer. I've been saying, I think the number one thing to be looking out for is like travel and hotels, flights, stuff like that. Because as soon as you start seeing big deals on those, that shows you that the spending is starting to slow down in that area. And that's where I think spending will actually slow down first if things do become a little tight. We've seen these headlines about people's credit cards being at the highest. Americans have the most credit debt that they've had, all this stuff. So people do start spending less. My prediction is that it'll be on travel, on things like hotels, flights, etc.
Yeah, it's going to be very interesting because oil, that's also a factor. We're going to have to see how oil prices maintain WTI crude. We're going to have to see how gas prices are going to be affecting CPI, PPI, because they were one of the main drivers when gas prices were so high and WTI was near $90, $100 a barrel. That was really a driver in the inflation print. And so if gas prices continue to stay down, groceries, so food, eggs, they had a good run. I believe in the report they mentioned that eggs were dropped to their lowest level in like 1960 or something. It was very interesting to see. So eggs had a good run. So all the produce, all like the produce that you get at the stores, that had a good run. That's now coming down. So there's a lot of metrics that are in the inflation report, that the underlying metrics that we don't really know, that we really don't pay attention to, that are the main drivers: oil, produce, travel, leisure. So there's a lot of metrics here that we're going to have to keep an eye on, because what happens if inflation ticks up? The Fed may have to do another 25, 50, 75 basis points. It was very interesting because someone asked yesterday, Powell, why didn't you just hike today? Why are you waiting to hike, maybe skip June, hike in July? And the answer basically was because the full effects of tightening haven't been felt yet. So they're gonna take a look. They're gonna see what happens now between now and July. What other data comes in? How is CPI and PPI looking? What's the jobs market looking like? What's manufacturing, the PMIs? What's everything looking like when they took the pause here? What's gonna be the economy in July? What are they looking at? And so that's gonna really determine what happens from July through the year end. Now they put dot plots out, and those aren't really accurate. So really, you can just throw the dot plots away. They really don't mean anything, because we know that they've been wrong on inflation. So we're going to get all these talking heads from the Fed. We're going to see what they say on June. He says July is going to be a live meeting. Don't really know what that means unless we're going to be having an open door policy meeting and we're going to watch it live from our living room. So it's going to be very interesting to see how July meeting shapes up.
I mean, I agree. I think like right now we've been so dependent on the Fed. It seems like almost we need right now for the Fed to give us clear direction in terms of their intentions. It seems like Jerome Powell did a good job of that yesterday, basically saying we're pausing for now. We're going to be looking at different things. But I mean, like what I have right, I mean, Nikola's stock is up 33% on the day, up 125% over the past 5 days. It's hard not to see things like this, Nick, and think, okay, maybe the Fed or maybe the market is getting a little, I don't want to say frothy here, but maybe there's some speculation here in the market that's the Fed's not deterring any of that. I mean, it doesn't seem like interest rates at this point are taking away any speculation from the market like they had earlier.
No, and he kept reiterating yesterday that 2% is their inflation goal. But the ECB this morning, they raised 25 basis points, and Lagarde didn't really sound like she was going to be stopping. It sounded like they're going to have to hike again because inflation is sticky over there. And, we have two different economies. Is a recession coming? I don't know. So there's like a lot of questions here. If the Fed stops, ECB hikes. I mean, each economy is different with inflation, but ECB, a lot of people do look to the euro over there, to the ECB Fed, looking to see how they're all getting together, what they think. But if ECB's not stopping, why is the Fed going to stop, or vice versa? So is Fed Jerome Powell going to talk with Christine Lagarde saying, hey, what's going on over in the ECB? What do you think that's going to mean for us here over in the United States? How's our inflation looking with your inflation? Are they going to compare metrics? It's very interesting.
Yeah. All right. Well, Nick, any other big headlines you're watching right now?
Not really. Just I did find that quote in the release from eggs. It says from the CPI report, it says the index for meats, poultry, fish, and eggs decreased 1.2% in May, as the index for eggs fell 13.8%, the largest decrease in that index since January of 1951.
Interesting. Yeah, I mean, it's the same story over and over again, Nick, right? Remember, everyone was freaking out about gas prices. Gas prices regulate. You don't hear about gas prices anymore. Everyone freaking out about egg prices. Egg prices regulate. You don't hear anyone talk about egg prices anymore. I don't know what the thing is right now. You know what we need to regulate is rent, and rent prices and home, because right now rent is still very high and home prices are still going up, making it, very hard for people in my generation, people in their mid-20s or even mid-30s right now to buy houses. So that's the next one that, if egg prices come down, then hey, maybe houses can too.
I guess you just got to live the office life like Elon Musk. Start sleeping on the floor in the BZ headquarters.
Hey, I'm down for that. I don't know if Raz is out here listening, but I'll put a bed back in one of these offices and sleep here. I'll save money on rent.
But I was going to say
like that.
No, Bloomberg had a report the other day saying that office occupancy is back above 50% for the first time since pre-COVID. And so it's like, you're coming back to the office. You've been in the office 5 days a week. I've been working from home because here I'm in Pennsylvania. But Luke said on the 945 call, if you are in the if you are in the Detroit area, you do need to be back in the office 2 days a week. So it's like we are starting to see mandates coming back slowly but surely that you got to be in the office 2 to 3 days a week. But to your point, rents are not coming down anytime soon. It's like every time you turn around, Bloomberg has a new story out that rents continue to go up. New York continues to get expensive. I mean, I don't know how some people are living in New York. Some rents, I'm on the apartments.com right now, for one bed, and this is in Park Tower South. This is 57th Street, New York. The rent between $4,275 to $7,500.
Wow. Unreal. All right. Well, I will keep an eye out on those rent prices hopefully again, some other prices begin to regulate. But Nick, great episode today. Thanks for coming on with some headlines to talk about. We'll be back No show tomorrow, Friday. I'll be live here on the channel. I'll be doing live trading and then some all access, but no Benzinga live. We'll be back next week. Nick, we'll get you back on next week. Always great to chat with you.
No problem. Enjoy. I'm actually off tomorrow half day. So
Oh, beautiful. There you go.
I'm only in until noon, and it's like early starts of the weekend. Remember, Monday markets are closed for Juneteenth. So we will see you back on Tuesday for Benzinga Live.
There you go. All right. Well, Nick, thanks again, and we'll chat soon.
Have a good one. Have a good weekend.
You too. All right, y'all. Thanks for everyone who tuned in today. Again, just to recap, we hit on Bed Bath & Beyond. We hit on Cava. We hit on Nikola. We hit on what, the Fed talked about yesterday. We pretty much, I don't, correct me if I'm wrong, I don't think there was anything that we missed today. So if there is, let me know and we'll get to it next week. Again, thanks for everyone who tuned in. My Twitter handle is down there on the bottom. Actually, it's spelled wrong. Let me fix that. I don't know who did that. I don't even know how to fix it, to be quite honest with you. Edit name and headline. There we go. It's Aaron, not A-R-R Ron. Aaron Brief 5. So if you want to give me a follow on Twitter, do that. Give us a follow on Instagram. Give us a follow on TikTok. Give us a follow everywhere. We'll be back next week. Peace and love, y'all.
This is Benzinga Live.